All right. Well, welcome back to the Post Frame 360 podcast. I am one of your hosts, Scott Craig, along with my partner in crime, Josh Nolan. Josh, good morning.
Hey, good morning, Scott. Ready to roll today, huh?
Heck yeah, man. We got sunshine, finally no rain. I will tell you, though, the mosquitoes right now are likely to carry you off. I mean, they're about the size of 747s. It's not fun right now.
I totally would think that's totally true because every it's kind of weird because I talk to you or talk to Jeff or somebody and it's like, oh, finally no rain, and then an hour later I'll get an alert on my phone that says Muskogee severe thunderstorm watch. I'm like, are you
Uh-huh.
kidding me?
Yeah.
No
Well, I think we're
reprieve.
about to pay. Yeah, I think we're about to pay the piper. I mean, they're talking hundred, triple digits this week. Yeah, it's about to get fun. I think we're going to have our own little greenhouse. So, well, hey, let's jump right into it. If for our listeners, if you joined us last time, we were in a conversation talking about planning your build around weather, and then as Josh and I were conversing back and forth, we kind of maybe took a little sidetrack. We were talking about some different things around business, and Josh said, "Hey, you know what? We should talk about that." So here's what we're going to do today. I hope you find the title as clever as I did. It's mine. Ha. Um, Bling, bank, or bust. Right. So this is going to be probably part one, and hopefully we can keep it to two parts. But Bling, bank, or bust. Why did we decide on that title? Well, here's the thing. When it comes to running your business, you either are going to have money to operate with. You're going to need to rely on financing, a bank, or you're going to not do either, not manage your business well, and unfortunately, you're going to bust, right? So, our goal with this two-part podcast is to um, give you some ideas or some direction in how you think about your business, plan your business. Because here's the thing: we want you to be successful. We want to be successful here at Burrows, and in order to do that, you have to adapt to situations. You have to think about, your revenue, your cash flow. You got to think about your credit. Who do I owe? Your creditors. So there's kind of a lot in there. So, excuse me, I'm a little stopped up this morning. I think it's the fact that we actually got sunshine. Um, but so we're going to talk about that a little bit. And this is my background. So my background is in business. I've owned businesses. So it's something that I enjoy doing. And as Josh and I were planning to come to you this morning, Josh was like, "Hey, you know what? You may do most of the talking on this one." But I said, "Hey, that's great because Josh, um, I'm going to put you in the driver's seat of the contractor. So as we're talking through this morning, I want you to throw stuff out there at me, right? Like let's
Absolutely.
try to make this as realistic as possible because it's really really important."
Yeah, I agree. Let's do it because
Uh,
yeah, it's definitely not my strong suit here, and there it takes a lot of different things to run a business, and a lot of different hats you wear as a business owner, and some of them you might be really great at, and,
right.
and others you may not. And Scott, I think I don't have anything necessarily to back this up, but I would guess that a lot of our clients, a lot of the smaller mid-sized post frame builders in out there in the industry probably they may be a great builder, but they've never had any education on business or business management. So this will
Right,
be good.
right. Yeah, 100%. So, let's start right there with something you said. Maybe not my strong suit. So that is the best place to start. If you know that there are areas where you are limited, if me giving you permission, listening and watching this right now means anything, you have permission to say, "I don't know how to do that." Okay. You don't have to know everything. A lot of successful business owners, myself included, you kind of stumble into it, right? Like an opportunity presents itself, or like me, I moved back to Muskogee. Some things were going on in my personal life, moved back. Thankfully, my mom, I was homeschooled. She put me in Votech. I knew some stuff. My dad was a home builder. And so I was like, "Hey, I'm going to come back to Muskogee." Kind of wasn't planned. And I'm going to do some handyman work. Well, that handyman work turned into a business, right? So I kind of stumbled into that. Thankfully, I had some background. But here's the thing: I am terrible, terrible at accounting. And I'm terrible because I hate doing it. It's not fun for me. So one of the things that I did as I was setting up my business, and I was like, okay, so this is going to go beyond just being a handyman. I need to go ahead and set up a business. And I set up a business for a couple of reasons. One is I need to protect myself, right? I'm in construction. Sometimes things can go wrong. I got to think about taxes. And so I hired a bookkeeper. Get my finger over here. We can see it. Forget we're doing
Uh-huh.
video. Hey guys, second time doing video. So I need to get a bookkeeper because I can't keep up with it. I'm out selling jobs, looking at jobs, estimating jobs, doing the work. So I got a bookkeeper and I had an accountant and I interviewed them. I need to find someone who isn't out there just to get their paycheck. I wanted someone who was going to be a partner with me in my company. And I said, look, your job, and I'm paying you to do this, is to tell me what you need from me so that at the end of the year, when I have to pay my taxes, I'm not in trouble. I do not want an audit. Okay. So they managed my bookkeeping. And then as I grew and I brought on employees, it's really, really important to have someone who understands state law for the state that you're in as it relates to employment. Now you could say, well, I can just do 1099 and I don't mess with all that. Okay, well, that's great. But there's still documentation that you have to have, even if you're 1099 your employees. So, first thing then, right out the gate here, it is okay to not know everything about running a business. What is not okay is when you don't know how to do it and you pretend like you do, and then you get to the end of the year and you're screwed, right?
Quick question for you, Scott, here, and
Mm-hmm.
and this, so first of all, you mentioned bookkeeper and accountant. Okay.
Mm-hmm.
Um, Oftentimes, could that be the same person in your experience, or are those two different people? And also, you think about hiring an accountant, you think about big money, but if I'm not mistaken, you can hire an accounting firm that will just reconcile everything once a month, and maybe an hour to a month, and maybe cost you $100 or $200. Am I in the right line there? Is that what
You are
you?
spot on, right?
Okay.
So I'm gonna be super transparent here. So I paid $200 a month for my bookkeeping. And all I did was, all of my receipts from buying materials, all the different things that I did throughout the week. If I have to buy fuel for my truck, if I've got a truck that I've bought for my business, like all of that, you know, again, I'm working. I don't have time to keep track of all my receipts and go home late at night, 7 o'clock, and I've got to go through all my receipts. I'm like, no, I'm not doing that. So for me, $200 a month was like, yeah, sign me up. So yeah, I just basically would get a bank bag and I kept my bank bag in my truck. And every time I bought something, and every time I had a receipt for anything, I would just put it in that bank bag. And then I would get my credit card statements if I got those in the mail and my bank statements. And I would drop that off at the end of the month, at the beginning of the next month. I would drop off all the previous expenses in that bank bag to my bookkeeper. I say, here you go. And I'm on my way. And they would manage everything for me and say, hey, Scott, you're missing this, or hey, we reconciled your bank statements. Like that's what they get paid to do. In the grand scheme of things, $200 is nothing, right?
Nice.
And here's the other great part about this, that $200 a month that I was spending for a bookkeeper, guess what? That gets to be written off of my taxes as an operating expense. So even though I'm paying $200 in that month, that's actually going to go back into my kind of it's going to kind of go back in my pocket because at the end of the year I get to deduct that from my taxes, right? And so I
Hmm.
may have already some of you may be going, okay, Scott, you completely lost me. You're like, this is boring. Okay, here's the thing. Here's your sign, right? Here's your sign. If this is boring to you right now, it's really, really probably a good sign that you need to find a bookkeeper, right?
I need
You
to
need to
find
find
one.
someone to make
No.
you need to find someone to manage your business because if what I'm telling you right now is boring to you, that's okay because this isn't your forte. But here's the thing, just because it might be boring to you does not mean you don't need to listen to it. Because if you're
Exactly.
not doing some of these things, you're either going to be in the bling, you're going to be leaning on the bank, or you're going to be signed up for a bust.
Hmm.
I
Hmm.
mean, that's where this goes, right?
The one thing that sticks out in my mind is, if you don't know where you stand in your business, you may feel good about your business. A lot of business owners are entrepreneurial, so they're optimistic, and I sold 3 buildings last week, and I'm doing well, so I'm just going to run out and get that crew truck, that I've been wanting to buy.
Mhm.
I'm thinking that in order to buy that bling or whatever, that you're going to need to contact your accountant and say, hey, do I have enough money to do this? Is now the right time to do this?
Hmm. Yeah, you're spot on. And when you think about that, when you go out and get that new truck, and here's the thing, guys, I'm not saying you can't have a nice work truck. It's not what I'm saying. Do not hear that. But if you're blinging, right? Like if you want to be all bling, um, but you're actually having to lean on the bank, it's not really bling because it's not even yours. You are attached to someone else and you're signed up to meet their terms, right? So again, be strategic. Now, yes, I had work equipment and I bought that equipment out of my operating income, operating capital in my business, but I was completely okay driving an older used pickup truck. It's a construction vehicle, for goodness sakes. You know you're going to back into something. You know you're going to haul something. It's going to get scratched all to pieces. Like it's a work truck. And again, I'm not saying don't have nice things. I'm not saying that at all. What I'm saying is make sure that your business is financially sound before you start tricking out your equipment. Because, yeah, it's nice to roll up to a customer's job site and, man, I got a nice truck, I got a nice wrap. It can be a little, um, you may not be getting as much traction out of that as you think. Because here's the thing, because I think this as a consumer, if I need service done and someone rolls up to my house and they've got the fancy chromed out wheels and they've got the wraps and they've got everything looking good, I don't look at them and go, wow, they must be a great company. They make a lot of money. I'm thinking, God, how much are you about to rip me off? Right? How much of this price you're going to give me for the work is to cover your truck?
I do
Okay.
want to play devil's
So,
advocate if I can, Scott, on that a little
sure.
bit,
Yeah,
and
let's do
that's
it.
because I've always kind of, preached the importance of at least showing up in a decent vehicle that's clean and marked, like marked, right? So
Hmm.
it's got your
Hmm.
business
Yeah.
logo on it, even if it's a magnet or a partial wrap, but something. I mean, you can
Yes.
wrap a an old rusty Chevrolet and make it look pretty nice for a couple $1,000s, and that's a lot cheaper
Yeah.
than going to buy an $80,000 pickup.
100%. And you're spot on, right? Because I use that example of if I roll up in a big flashy truck, me as a customer, I'm going to be like, yep, I know what I'm getting. Same thing. If I roll up in an old beater that's fallen apart, I'm probably not going to choose that person as my service provider either. So you got to, man, this camera stuff's getting off. You got to meet in the middle, right?
Hmm.
So I don't need to be flashy, but I got to show that I'm successful. And yeah, you need a brand, like you should brand, because that's another tax write off, right? So, but it's again, the whole point of this is not about flashiness. It's not about the truck, even though we're using that as an example. The thing is you've got to be financially sound. You need your business to be financially secure. So part of what brought this up is we were talking last time about weather, which is we've had I mean, this has been crazy, especially here in Oklahoma. I mean, yesterday we got rain yesterday, almost the end of June, and we're still so wet. Our contractors, they cannot get to job sites. So they're running into some cash flow issues because I can't finish a job. I can't get to the job to finish the job. I can't get paid for the job until the job is finished. And I don't have enough in my coffers to cover
Hmm.
something like this. So now what? Well, man, I still need to be building buildings. I still got to buy buildings. And this is me being transparent here, guys. And that's what this podcast is all about, right? And you have my email address. If I ever offend you or you say, Scott, you went too far, man, let's talk about it. Because my intention is not to go too far. My intention is to be just transparent as all get out. So if you haven't built your coffers, you're running low on cash flow because you didn't plan for something like that, and you've been ordering buildings from Burrows, and maybe you have credit terms with us. You can't finish a job, but you really need to get some more jobs in the pipeline. You need to get them ordered, but you're past your credit limit. Well, okay, I'm not going to sell you more buildings if you haven't already paid me for what you've got purchased so far. But you need to continue purchasing materials, but you can't get money. I mean, that's a recipe for disaster. And honestly, we're
Hmm.
seeing that right now, right? We're seeing that. And so it affects your business, but it also does affect your supplier. So, guys, we're in this with you, right? Like, if you can't get to buildings and you can't get paid, well, we can't deliver buildings, we can't get paid. We are very symbiotic in our relationship.
Hmm.
And so we had to figure out what to do. So for Burrows, we've had to make some very, very, um, I hate it, decisions, but we got to protect our business, right? And ultimately, in those decisions that are not fun to make, we put our people and our customers first, and we do the least aggressive thing possible while understanding we still need to maintain liquidity. We don't want to not be able to pay our bills. And so that's something we got to look at. But we've done a good job of creating some surplus so that when you run into something like this, you don't have to close the doors. And I
Scott, I
want to
want to
pause
just
right
touch
there,
on.
Josh.
Okay. Yeah, I want to.
Yeah, no, jump in. I want to get your
Okay,
feedback on that.
okay. I was like, "Whoa, what are you doing here? Are we officially pausing? Are we stopping?" You know, I
No,
know I've had some
no.
internet issues sometimes here, but no, I think that it's a good time to kind of note that. I mean, if you're having trouble with cash flow and you're in this situation right now, I think there's a couple things that come to mind to me right away, and one is evaluate how much money you're taking down on a new contract. Right? I think we
Mhm.
any reputable contractor should be at that 20 to 25% down of the total project when they sign the contract. If you're doing site work, if you're selling your client site work and concrete that has to be done prior to the build, site work
Mhm.
obviously always does, but concrete before the build, I would say, hey, the day we pour that concrete, we need to be paid for that concrete. So
Right.
basically what I'm getting at is if you're taking money that way from your client, then you should be able to pay for your materials even in advance if you had to. That's the one
Mhm.
thing I want to add. The other is if you're having trouble, you're saying maybe say, Josh, I'm just having trouble selling right now. Now you're telling me to ask for more money down. Well, now may be the perfect time to offer a fall build or a winter build discount where you
Mhm.
say, hey, look,
Mhm.
my lead time is out 10 to 12 weeks because of this rain. So everybody else should be in the same boat. But hey, if you're willing to wait, I can take, um, you know, I can go ahead and give you just offer them a little discount or something, right? To
Mhm.
go ahead and get
Mhm.
signed up and allow you to build later. So, but you can still go ahead and get that 20% down to cover that project when you do actually get to it.
Mhm. Yeah, you're spot on. And here's the thing: I just had a conversation yesterday with one of our contractors, and talking about this, and thankfully, he makes good decisions. He's his plan one day is to potentially sell his business, but he wants to sell something really profitable. So he's not living it up, right? He's doing really well, but he's not out there just living it up, and that's really really important. And again, I'm not saying you're a business owner, you should live destitute. That's not what I'm saying. What is it you're trying to accomplish with your business? And that's probably a really, really important question. What are you trying to accomplish with your business? If your goal is, man, I just want to make money, I want to make flow, man, I want to buy the boat, I want the new truck, I want the fancy house, I want all of that. Okay, fine. If that's what you want, how are you going to get there? Because if you're going to get there by robbing Peter to pay Paul, it's going to catch up with you. I'm sorry. Sorry to be the bearer of bad news. It's going to catch up with you.
Hmm.
Because it typically takes, and here's the thing, right? I've owned four businesses. It typically takes 4 years from the time you start up a business. It takes 4 years before you have enough extra revenue to be able to start giving yourself bonuses to kind of move yourself up the income scale. Again,
Hmm.
I'm completely transparent here. I paid myself $2,500 a month. That was what I paid myself out of my company. Now, some of you might go, well, you sucked as a business owner if that's all you paid yourself. No. You know why I paid myself $2,500 a month? Because I had a substantial amount of cash in my business bank account. Because there were times whenever I got into weather, I couldn't do the job and I didn't want to lose my employees. And I had good employees. And so I would pay them even when they couldn't work. Guess what? They worked their butts off for me because I took care of them, right? Um, I did not mark up my materials. I didn't mark up my materials. I I made a premium on my labor. I
Hmm.
did not mark up my materials. So,
But
did
that
you have
doesn't
something on
mean
that,
they
Josh?
shouldn't. Our listeners shouldn't, right? They
No,
that
no, no,
doesn't
no.
mean they shouldn't. Definitely, I would highly recommend that you mark up your materials.
Right. But see, that's the thing, right? Like that's part of this conversation is how did you get to doing things the way you're doing? If you mark up materials, go for it. I'm not saying don't mark up your materials. What I'm saying is
Hmm.
I didn't. I made a
Right.
premium on my labor, right? Um, Mark up your materials. That's fantastic. But another piece of this puzzle or this discussion, and Josh, you alluded to it about collecting deposits. That as I've been here with Burrows, I'm kind of amazed about how many of our contractors really don't take much of a deposit up front. Just minimal $1,000 at contract signing. And here's the thing about that: some of the concerns about doing more than that, they're legitimate. There's a lot of bad actors out there, no doubt. But in any service profession, you have them. You have the storm chasers who are going around. They sell you a roof for dirt cheap, and then 2 months down the road, you got shingles loose, and you can't find out that they were like fly by night, right? In the post frame space, yeah, unfortunately, we've had some bad actors, right? They sold buildings that they never even delivered on. They would drop your materials and never show up to build it and took your money and they're gone. It happens. I'm sorry that it happens to a customer, that it happens to a consumer, but it happens. And so, yeah, some of our contractors have said, man, I can't ask for money because, people have been asked for money and then the contractor runs off with all their money.
Hmm.
Okay. But you're not them, right? You're not them. And for me, I
Right.
did. I asked for with my own company, and even when I was with Morton, 30% down for the estimated job. And if
I
anyone was
want
concerned about that, I want to let you hop in and I'm going to say this and I'm going to shut up. Is I would say, look, if you have any concern about this, here's a list of all my customers. You are welcome to call them and say, did Scott do what he said he was going to do? If
to.
you're a
Hmm.
good contractor and you're uh, have integrity, give them a list of references. I'll shut up.
No, I want to add to that. I think that's really good information, and here's how I think about that down payment that you're asking for from a customer. I'm actually okay if I had a sales rep or if I was out trying to sell a building to take like a 500 or $1,000 deposit to take them off the street and get them to sign their contract, right? Like, but
Okay.
over the next 30 days or whatever that time period is, I'm going to continue to build a relationship, my trust with that customer, and they're going to understand before
Mhm.
I order your materials, you're going to give me my full 20 to whatever your deposit is, 20 or 25%. What
Right.
is, I think, a huge mistake is if a client is taken off the street for 500 or $1,000, sign a contract, and you don't take any more money until the
Mhm.
materials deliver or until you start construction. I think that is a bad move. That's way too much exposure for anybody's business. And so,
Yeah.
yeah, I
Yeah.
just wanted to throw that in there, make sure people understood that too.
Yeah, no, you're spot on, and I can tell you right now, we had that happen yesterday. Someone had to cancel a project and the trusses are done. The laminated columns are done. Thankfully, we didn't run the rest of the building, but trusses are done and columns are done. And the customer, not our customer's customer canceled the job because they're tired of waiting. And there's a very good chance there was like $1,000 down payment at contract signing. Well, here's the thing: if you're so backed up you can't get to jobs, and this customer doesn't want to wait anymore, they're willing to lose the $1,000 if someone else can build it sooner than you can.
Hmm.
So Josh is spot on here, man. Like if you have value, don't be afraid to charge for your value. If you've got happy customers, lean on them. Again, I will go to Morton and I'll also talk to you about my own personal business, but I did really good work. Those of you who know me, I don't brag, but for the sake of this conversation, I do really good work. I'm a perfectionist when it comes to construction. And when I was with Morton and I'm asking for a pretty high down payment, or if my own company and I'm charging a premium for my labor, it's a lot of money. Scott, why should we give you this money? Well, why don't you ask my customers? Let them tell
Uh-huh.
you, right? So, man, we are at 25 minutes. How did that happen? Like,
I don't know.
man, I don't even know that we got past blah and bling. That went by way
Right.
too fast. But so here's the thing. We do what we say we're going to do. We said 25 minutes. We're 18 past. So we're going to pause right here, and we're going to invite you back for session 2 of Bling, Bank, or Bust. Hopefully you're finding this interesting, right? Because it's going to get deeper. I don't know. Could go three episodes. God, I can't believe how fast that went. So, Josh, great questions, man. I love it. I love this dialogue because here's the thing. I want you to be successful. And
Uh-huh.
if you don't take time to learn what that looks like, then you're kind of playing Russian roulette. And I don't want you doing that, right? So, guys, thank you for joining us for Bling, Bank, or Bust Part 1. We'll see you on the next episode of Post Frame 360. Peace out.